Hey guys, welcome to my channel Success Sequence where we daily analyze Nifty and Bank Nifty for their important move and expected level for the next day. Just a quick overview of my WhatsApp broadcast. So today what are the messages that I have sent are here for you if you want to look at. At 9:26 I said maximum downside is 9859. So I was expecting that market should not go below this level, but market did go below that level. But what you can see is market did come up and closed above that level, so that is something is very important. If you want to trade market, you should understand. I'll also explain to you why I feel that this level is very critical and it should hold. So in the closing time I also gave a call that if market closes above if trades above near 9880, you should definitely go long in a Nifty, and same for the same level for the Bank Nifty was 24195. So as expected, market did not close below 9859 and closed at 9872, just 8 points away from what are the from our concrete expectation of market being up for the next day. So now let us analyze what the option chain data looks, what are the indicators is suggesting, and how you should trade market for tomorrow. So first thing first, option activity range is 9700 to 10,000. So it is something that is suggesting that market will remain in a broad range of 200 points on a downside and 100 points on upside. On call writing side, I can see that maximum call writing has happened at a level of 9850. Sentimental wise also I can see a strong change in open interest in terms of percentage being placed at this level. On a higher side, 9900, 9950 and 10,000 level, I can see aggressive call writing has hold. So market participants are not squared off their position and they are expecting much more downside from this level. So call data is suggesting that market participants are expecting stable to bearish kind of move in the days to come. If we analyze put data, what I can see is fresh bearish position is created at 9750, 9800, 9850 level. So that is suggesting that market participants are expecting Nifty to trade below this level. Again, if I see that maximum downside here is 9750, because from below this level I can see the put writing has taken place. So rest assured guys, market should not go below 9700, and on a worst side you should trade stable or in a particular broad range. What are the range, I'll explain to you in a bit. Again, on a higher side I can see from 9900 to 10,000 I can see put short covering. So whenever you see put short covering happens, and if you see the put short covering in a more than 60-70 percentage terms in a early early in the trade, you can expect that this kind of move should prevail and market will go down or trade stable to bearish. So this kind of position created much early in the market today. So what you can expect from call option chart data is that market participants are expecting a stable to bearish move, but maximum downside what market participants are expecting is 9750. 9700 has seen put writing, and below this bracket prices also has witnessed put writing. So you do not expect much lower levels from here. At least 9700 is intact. If you see fresh put writing being taken place in a next day or tomorrow, if you can see. So let us try and analyze what the option chain data is suggesting. So as you can see, market has now closed below is 55 days exponential moving average. And if you see just visually, if you see whenever the market has came at this level, you can definitely expect some sort of bounce. And again here you can see that market is again came at this level, again it went up, here it again come at here is trading at this level. And now what we need to decide is whether the market will go up from this level or it can go down. So let us analyze what the market looks like. So as we can see, we are seeing a good amount of space between all the moving averages. That is suggesting that the market participants are yet not sure about what the lower levels could be. Since we are already trading below 55 days exponential moving average, what we need to do is we need to add again another moving average. Again it will be a Fibonacci moving average, but it will be 55, so it will be 89, and it will exponential moving average. So again here and create. So as you can see, 9759 is a level where the maximum downside you can see. It is also getting tallied with our option chain data. So if at all, what you can do is, if market trades below the 55 days exponential moving average comes at 9759, and if you see some sort of bounce or option chain data suggests some sort of bullishness, you can definitely go long at this level. So 9759 is a level where I am expecting a support to come. Further, if you just plain analyze candlestick data today, you can see that market has rejected lower prices. So we have received rejection at a lower level, that is again suggesting that the market participants are buying at a lower level. So that is again suggesting that these are the levels that should not come in a near days. Again, we'll be analyzing the weekly data, but first let us clearly analyze what the daily chart is suggesting. So uh, if you want to trade market, what you can do is you should wait for the tomorrow's move, because I am expecting some sort of up bounce to come. However, option chain data is suggesting that market will trade sideways. If at all it trades on a higher side, it will not go much up, but I am expecting that since the market has received a good amount of rejection at a lower level, it should go up. So let me clarify, because it must be you must be wondering that all the levels are being suggested, so what should you do? So here is a clear cut strategy. If market opens on above the 55 days exponential moving average, you should go long. But what you can do is you should expect first target of 9924. If market trades above 9930, you can expect another target of 9950. And if you are trading on an option, you should not wait for the market to break above this 34 days exponential moving average. You should book all your gains at 9950 level. Maximum is the upside, what I am saying. If you see market going down, let the market go down again. If you see in a today's low, if you see some sort of buying taking place, you can go long again with a target of 9898 or around that level. So what you can do is you can buy near the support and aim for the target. So in that way, even if you go wrong, you will end up losing very few money, very small amount of small piece of money. But if you get it right, you can make a good amount of money. Because see, here because you are buying at a level where the market is going to retrace, or it can move at a particular level. Again, if you see market going down from this level, and if you see some sort of rejection happening at a 9759, you can again go long here and expect a target of at least uh, 9870. So that is the strategy. Every day you cannot predict the market whether it will go up down, but what you can do is you can check the market support and resistance and try and trade accordingly, so that you can manage your risk. The key is to go wrong, but not to go wrong so much that you are end up losing all your money. If you for example, if market receives some sort of rejection and market tries to trade up, so what you can do is you can here go long and expect a target of uh, 9870. But if you see market is not holding at this level and continues to go down, you can immediately square off your position, so that will result in a small amount of loss. But if you see that market did tries and goes up, you can definitely expect your level to meet, and you can definitely end up making good money. So this is called how you can trade with risk reward positioning, and it's very effective. I have been doing it for quite a time. So and that was my analysis for the Nifty. Just if you want to check what the RSI is suggesting, as I said earlier, if RSI goes below this red line, which is 55 days exponential moving average plotted on RSI, you can definitely short the market. So if you have seen my previous video, I have suggested my subscriber to short at 10,200 level, or if they are operating through option, they can short they can short call option at a 10,200 or 10,100 strike price. So if they have done that, they must have made good amount of money. Again, if you check RSI is also suggesting some sort of level at a lower level. So a slight down move, then a support comes into picture, and definitely you can see a bounce back. MACD now trading in a negative zone, but if you see a move from here, remember zero line crossover, and any crossover, whether it's a bearish or bullish, it will give you good amount of move. So you should definitely buy call or put whatever the market whatever side the market trades. Again you can see that volatility has increased today because the red line has been broken today, so definitely you can expect some sort of high voltage drama today. So you can definitely see market has generated good amount of volatility. So that is something very crucial, because having a expectation of volatility in mind and trading option, it's something like very beautiful, and if you can end up making very good money. So I have received a lot of appreciation for my this volatility indicator and how nicely I have suggested that I am using it. So that is very important. If you are trading if you are trading with option, you should definitely have some sort of view about the volatility, and it definitely helps. So that was my quick analysis for the Nifty. Now let's look at the Bank Nifty and see how you can trade Bank Nifty for tomorrow. So first of all, option chart data are very confusing. Just let me give you a glimpse of it. Option activity range is suggesting 23,000 to 25,000 kind of move. So downside 1200 points and upside 800 points. So that is definitely not suggesting that market will go down that much or will go up that much. But what I can suggest is, I can see a good amount of call writing taking place at a spot level strike prices. So that is again suggesting that market participants has hold on to their call writing position, and whenever you see a call writing position, there will be a stable to very smooth. So 23,700 to 24,700 is a level I can see a good amount of call writing being taken place. And again I can see call long getting covered at a high level like 24,800, 24,900, 25,000 level. But now what is something that is changing the entire game is the put chart data. Here I can see 23,900 to 23,000 is suggesting a put writing. So again a good amount of put writing is done at this level. So that is suggesting that market participants are not expecting 23,900 to get broken. So that is again in line with our analysis. You can see that 23,800 is the 89 days exponential moving average. So you must be feeling that why 23,800, and why market participants are not writing the 89 that 23,800 level, rather they are writing 23,9,000 level. So this is because to get some sort of advantage and some sort of price move, because 23,800 might not be that much fruitful, but 23,900 is definitely a fruitful. And if market goes down, first market will break 23,9,000 and then 23,800. So that way they can take a good amount of risk reward positioning. Again, because you can see here that market has some sort of tails here. So you can again, if you see this level 823 850 is will act as a early warning signal if 23,900 put players want to cover their position. uh, so if I analyze candlestick data, what I can see is a good amount of space between the moving averages. So still market participants are not clear. As I suggested, 23 800 will be a good support, but I also feel that 23 850 will also be a good support, because we have seen quite a few times prices getting rejected at this level and uh, being generated at this level. Again I can see some sort of support must be there at RSI level, because I can see here, you can see that so this is a level where you can expect some sort of bounce back. So that is the reason I did not suggested the market participants to go long unless it breaks particular level. Here you can see the MACD is already in trading in a bearish zone, so that is something that is suggesting a bearishness. And 23,800 definitely going to come in the market if this MACD crossover accelerates on a lower side. Volatility has spiked up as in line with our expectation, and you can see that it can further accelerate. So and if at all this happens, you can definitely see lower levels or lower supports being taken out. So now let us analyze and finally finalize what are the strategy you should be employing for the tomorrow's trade. So guys, as I suggested in my Nifty's outlook, what you can do is you can wait and let the market open. If at all market trades on a higher side, I mean above 24 to 70, you can definitely go long, and I expect a target of at least 24 414. And if at all market trades on a downside, what you can expect is, suppose market closes opens below 20 4160, then you can expect maximum downside till 2412, and if market starts rejecting or starts to reject prices at a lower level, you can definitely expect a up move, and first target will be 24,160 and second target will be 24,270. If market breaks this level 24,110 or 24,000 gets broken, you can definitely go short on a market and expect a target of 23,800. One hurdle would be 23,850, because there is at this level we you can observe some sort of buying or some sort of rejection in lower prices has happened. So that was clear cut analysis. You should trade according to market and go with the flow. If you want me to give my suggestion during the live market, how you can join me, you can join my WhatsApp broadcast. What I do is I check option chain data during the market hour and analyze what should be the upcoming move. I also check various time frame to confirm my analysis, and then I suggest that whether you should go on with the analysis that I suggested today or do not trade. So if you want to join me, you can join my premium WhatsApp broadcast. For that, you can WhatsApp me on 95743 So and that's it for the today's video, guys. As always, if you have liked my video, please hit the like button, subscribe to my channel, share it to your friends and family, and in case if you have any doubt, you can always mention it in the comment section of the video. Thank you.